Broadening of the market that has been showing new signs of life as we close out the year. Month to date, we're seeing groups like financials and industrials outperform tech. Let's ask Palumbo Wealth Management's Phil Palumbo. Welcome. It's good to have you.
Thank you.
So how are you positioning? You manage high net worth clients, investors, entrepreneurs. How are you positioning them into 2026?
Yeah, so first, the wind is at our back as it relates to the overall economy, and which translates into earnings, which I think will be another up year for the market. And so with all that wind at our back, I do think that translates into the other 493 companies. And the question everybody has to ask themselves, well, why is that? And for me, it's about the Fed cutting rates, so rates going lower. That'll help the other 493 companies. And then I think a lot of these companies are going to integrate AI into their companies, ultimately increase in productivity, which will see their earnings start to increase. So I think those are the main reasons why you can see a broadening out.
So you expect more Fed cuts? Because we got 3 this year.
Yes.
That was more than what was expected initially.
Yeah, I do. I do expect that. And I do think the new Fed chair will be dovish. So I think overall we'll see a situation where rates do go lower than we are today from a Fed cut situation. I think it makes sense looking at the labor market cooling a little bit. And I think that inflation is not problematic. And with that, I think it's a recipe for to continue to cut rates.
And then you expect next year to be the year that we start to see the AI impact on earnings?
I do.
Higher margins? What does that look like?
Well, first of all, I think you're seeing it already, right? And a lot of companies that are implementing, like Salesforce is one that they implemented with their agent force, and you're starting to see it in their earnings now. So you start to see it already, and I just think
Salesforce is one, but it got punished this year.
It did get, there's an overhang right now with software companies, right? It's this concern about AI taking over their business, less seats within their business. But if you look at Salesforce and their business, they're thriving, right? So in terms of the agent force and their implementation of that, I mean, that alone is up 330% year over year. The data cloud and that business combines up 114% year over year. It's now a $1.4 billion piece of their business.
Why do you think the market's not giving them credit?
It's because
down 20% this
year. Because just like anything else, everybody's concerned that AI is going to take away part of their business, and other people are going to use AI, develop software like the CRM. But at the end of the day, Salesforce dominates in CRM. That's not going away. In fact, they're using AI to make their business even better. And if you listen to the CEO and they talk about the rule of 50 coming 2030, I mean, they're doing a great job allocating capital. It's trading even less from a valuation perspective, less than many of the software companies out there right now. So I think you're going to see a lot of implementation of AI into businesses, which you'll see productivity enhancements overall, which will translate into earnings power going into.
So Salesforce is one. Where else are you spotting winners? Especially interesting opportunities here where you think there's some market dislocation.
Yeah. So Sarah, I say it all the time. If someone said sell all your stocks in your portfolio, what would you buy? And I would buy Google. Google to me, and the big
even after the run.
Even after the run, the big question I get all the time from clients is, Phil, what's going to be the biggest winner of this AI run? And I say it's going to be Google. Google is the most vertically integrated business of all the businesses out there.
And you've said that. I just want to give you credit before this year. And
I did.
It's helped you have a good year.
It has, correct. Yeah. So, I mean, and Google just, I think, has it all, right? Gemini is just a phenomenal product. Their TPU, now they're selling their TPUs to Anthropic as an example. So now they can compete in the chip space. And YouTube, there are more people watching YouTube than there is Netflix. And their Google Cloud business is growing phenomenally well at 34% year over year. And their backlog is up 82% year over year. So we're talking about an incredible business that's only going to thrive. And that's why you saw Berkshire Hathaway took a position in it recently.
I know. It's just, coming into the year, everyone was worried that Google was existentially threatened by OpenAI and ChatGPT. The whole search business was going to be like the competition was coming and they wouldn't survive. Yeah,
which I totally get that. But the opposite is I think the CEO is an incredible CEO and they executed really well. And now the momentum is at their back.
So Google, top pick.
Yes.
Salesforce, clearly.
Yeah. And Amazon. So Amazon's only up 6% year to date, right?
Lagged.
Yep. So it's lagged because of the tariff overhang, which is true of many companies out there. So I think going into 2026, a lot of the tariff overhang now is fall by the wayside. Similar with the AI overhang with software. I think a lot of that falls by the wayside, and you start to see e-commerce, and you see investors give Amazon credit, right, for the e-commerce business where they laid the foundation. I think you see margins expand there. Their AWS business, the last quarterly print, they hit 20%. Their backlogs are phenomenal. And I think their AWS business in general, the cloud business, is only going to continue to thrive. They dominate in that business specifically. So I think, and then their ad business is up 20 to 25% growing. And it's very profitable as well within the company. So I like those 3 companies.